So I mean, I can talk about the account structure, and Scott, if you want to jump in and talk about any taxes, feel free.
Yep.
I'll do your job for you a little bit here and say that technically speaking, of course, an IRA is not a tax-free account, it's a tax-deferred account. So the closest that we'd say that it's a tax-free account would be the Roth IRA in the US, or really the ISA here in the UK, right? So they're the tax-free accounts. You put money in post-tax and it grows tax-free forever, no matter what happens inside of there. Whereas an IRA or a pension is tax-deferred. All the growth occurs inside the account, not paying taxes along the way, sometimes for 50 or 60 years. But then when you take the money out, it's going to be taxable at income tax rates. So there is sort of an analogy there. UK pensions are very, very, very similar to the IRA structure. There are differences. Obviously, you can contribute different amounts, but in terms of just understanding the structure, the IRA and the pension regimes are very close to the same thing. It's pre-tax money that you get from your employment that you put in for the tax benefit up front and the deferred growth. And then when it comes out, it'll be taxable as income. So to get that benefit, as I said, you have to keep the IRA inside the US. You can't just take an IRA and re-register it with Hargreaves Lansdown over here. There is no mechanism. But if you have an IRA, you can keep it in existence and keep it invested in the States. If you want to grow your retirement assets, probably because of the size of the allowances, UK pension look pretty appealing. You can be putting away quite a lot of money every year into UK pension for the right person with the right level of income.
Yeah, there's a couple of other points on that actually as well. Sometimes we do a bit of planning for our US persons in the UK contributing into a UK pension, in the sense that on the US return, rather than take a deduction for employee contributions and also looking at the employer contributions which may be made into the pension, we would look on the US return to tax employee contributions and not deduct employee contributions. And this is typically for a US person who will eventually return to live in the States to live. So not someone who's going to be here forever, but someone who, maybe in 10, 20, 30 years time will be retiring to the States. And the reason we tax the employee contributions and do not deduct the employee contributions is because that build up a tax basis within the pension, the UK pension, for that individual, such that when they do eventually return to the US and then start to receive that money out of the UK pension, it's the contributions element of that pension will not be subject to US taxes because they've already been taxed way back when on the actual US returns. So that's a good way to pretty much achieve tax-free income for the contributions. The growth element would still be taxable in the US, but then the contributions wouldn't be. And because they're living in the US at that point in time, the UK won't tax that either on sort of periodic distributions. And there's ways we can achieve no taxes being deducted in the UK as well. You have to fill in some forms and you can achieve the payments from the UK pension gross, basically. And so then you end up just reporting the taxable element on the US return. And even that taxable element, you can then maybe offset some excess foreign tax credits, which they may have built up and which could be carried forward for up to 10 years. So I did have a client retired to New Mexico, and he didn't pretty much pay any taxes for the first 10 years on his pension, his UK pension. So that worked out really, really well. And then, of course, in the UK, you also have the first 25% of a UK pension being tax-free. So that's another thing which we would not consider being taxable in the US either, the first 25%. Some firms would consider that to be taxable, but we take a position which the IRS hasn't challenged, where we would also say that 25% distribution from a UK pension isn't taxable in either country.